seen over the last few trading sessions, is taking a bit of a breather in trade today. But to understand what the market setup is looking like from a fundamental perspective, we are now joined by Tridib Bhattacharya, President and CIO Equities at Edelweiss AMC. Mr. Bhattacharya, afternoon, and thank you so much for taking your time out and joining us here on ET Now. How do you view the market at this point in time, given how earnings season has been so far and given the kind of management commentary that we've seen? Do you expect the second half of the year to be much better for India Inc. and that will perhaps drive earnings for the full fiscal?
Yes, thanks for having me on your show and wish everyone very happy festive season. The first thing that I would say is we are at a crucial juncture with regards to earnings in India. We think that we are at the inflection point where the earnings downgrade cycle, which has been going on for the last 1 to 1.5 years, is finally and gradually coming to an end. And hopefully we are likely to see a start of an earnings upgrade cycle. How long this earnings upgrade cycle remains will drive the upside from here, but we are seeing for sure the inflection point with regards to earnings in the current result season. For the companies in Nifty 50 which have reported so far, one thing that one can safely report is while the previous two result seasons saw an earnings downgrade of about 1 to 2%, so far from the results that have come so far, we've seen an earnings upgrade of about 1 or 2%, which is a very good sign to start with. Along with that, the management commentary that we are witnessing, particularly on the consumer discretionary side and also on the financial side, seem to suggest that there are better days ahead. So I think there are reasonable grounds to say that the second half of fiscal year 26, starting from December quarter onwards, should have better earnings and should see the start of earnings upgrade cycle for India.
All right. Hi, Mr. Bhattacharya. This is Kanishka also joining in. Like you were saying, we are entering into an earnings upgrade cycle very soon. So, I was just going through your fact sheets and all. One of the earnings beneficiaries sectorally that you have mentioned is the defense sector, right? And we have big announcements coming from for the defense sector. 2.51 lakh crore of procurement proposals have been approved in just FY26. So just wanted to take your view on the defense pack. Where do you see the sector headed over the long term? Big order books are very strong for most of the companies. So how do you see the sector headed going forward in the, say, next 3 to 5 years?
I think the defense sector is of strategic importance in the current geopolitical arena for all the countries in the globe, including us. And given that we've had years of underinvestment in this space, if you look at in the last 10, 15 years, we might enter into a slightly overspend kind of a scenario over the next 5 to 10 years. We are seeing the first signs of that in the form of big contract announcements coming through, Make in India version of defense procurement coming through. And all of these means that for government capex, as far as government capex is concerned, defense would be an important area where money will be allocated to. The issue from a listed market standpoint is that the listed space in this has still a few candidates listed as opposed to the space getting bigger. So there's a lot of appetite for such names in the market. But for companies in this space, there are order books which can fill the top line for the next 10 years. So I think fairly strong order book, fairly strong execution cycle. The intention by the government is fairly strong, makes us overweight in this space across our portfolios. We from time to time, we are mindful of the valuations. That's where we kind of toggle our weight up and down. But structurally, we are positive on this space.
Structurally positive on the defense sector, that's the word coming in. But other than defense, which other sector are you bullish on?
Major bet that we have across our portfolios is on consumer discretionary sector. We feel that a lot of the GST cut beneficiaries, the income tax cut beneficiaries, and also next year, as we see the PSU wage revision come through, all of that, this would mean a better outlook for consumer discretionary stocks, depending on the segment, of course. But I think that from the next 3 to 4 year perspective, this is one space which has underperformed if you look at the last 3-4 years as a sector. And with better catalysts ahead, we think they should have a better days ahead. So consumer discretionary space, particularly hotels, whether you look at autos or other spots within like apparel, etc. Within consumer discretionary is something that we like from a medium-term standpoint.
All right, so you like the consumer discretionary space from a medium-term standpoint. But what about IT? You know, IT earnings have started to pick up. Do you think that the worst is over for IT?
I think the next 12 months will have, 2 or 3 themes play out. One we talked about, which is the start of the earnings upgrade cycle. The second is the evolving trade landscape. I think if you look at the last 12 months, we've seen fair amount of trade tensions between United States and various trading partners. This, in some form or the other, will resolve over the next 12 months. And in that context, as India resolves its ties with that of United States, like we saw a relaxation in H-1B visa fees, etc., we will see the negative sentiment around the IT services also gradually lift away. In the context of earnings, the earnings that have been reported so far have been in line with expectations. So a combination of fairly poor sentiment towards the sector and earnings estimates fairly in line makes us actually neutral in this space, but with a positive bias over the next 12 to 15 months. We think a lot of negativity is there currently factored in the prices, but it might take a bit of time to follow through. So selectively positive is the way I would put it. But IT services as a contra play is something that we like over the next 12 to 15 months in our portfolios.
So negative with a slight bit of positive bias on the IT sector. That's the word coming in. Mr. Bhattacharya, thank you so much for taking your time out and joining us this Friday afternoon and helping us understand what your view is on the market for the rest of the year. Thanks so much for joining us today. On that note, we need to slip into a very short break, but stay tuned. More news and updates will continue on the other side.